Hi, I know you're probably waiting for a well professional edited video. Definitely, I know that. But wait, this is not that kind of video because what I'm going to share to you is a very sensitive information on how you can flip and how you can scalp successfully with the strategy I promised you. You see, this strategy is one of the strategy I myself personally derived by my own experience in the market. It's an idea I developed myself. It's a way the market is manipulated I developed myself. How to read manipulations in markets. So this information is not being taught out there. If you check on YouTube, check on courses, you are not going to see this information I'm about to share to you. And this information is basically for scalping and flipping alone. It's not for professional trading or trading with risk management. It has a high probability of winning. It has 17% chances of winning. When you get into the video, you are going to get the information properly. And you might be wondering why I made this video this way. That's because I have to make it that way, because I don't want my face to be known. I don't want my face to be seen on this course. Because this information really reveals the secrets of how you are manipulated out of markets. And these informations are many more in my pocket that if I continue to share it out, they are really, really secretive and powerful to you. For people or regular traders to know, because this information is what the bigger players use to manipulate you out of the market. So take it serious, and once you learn it, keep it to yourself. Do not share it out. If not, when the bigger players see that this information goes out and people are beginning to understand it, they change the game over you, and then the strategy stops working. All right, let's get into the game. And remember, I said there are rules in this game. There are rules in this strategy which I mentioned. Follow the rules diligently and see yourself profitable. Thank you. I'll talk to you later. Let's get into the real drill.
So let's go to this point. So we are going to be using the bullish flag, but we are not trading bullish flag. Take note of that. But you are being managed. See all these patterns: the bullish flag, the bullish peanut, the bearish peanut, the bearish flag, falling wedge, rising wedge. They are all dumb money concept. I've always said all these things many times. They are all dumb money concept. They are patterns that are made to manipulate you out of the market. You see, these patterns are created by the real time players in the market, the big players in the market. They are the ones forming those patterns so you can see them and then fall into their trap. But now I will teach you how you will not fall into their trap trading those strategies. When you see all these strategies, these strategies don't work 90% of the time. Don't work. They work 10% of the time, but they don't work 90% of the time. But I will teach you how you can benefit from the 90% of the time this strategy don't work. Or let me say they don't work 80% of the time, they work 20% of the time. But I will teach you how you can be on the other side of the coin that comes out 80% of the time. It's just simple manipulation of the market. You understand? See, these strategies are just simple retracements, trading retracements. So now let's take a look at what this. Now this is the bullish flag. You understand? Let's open another. So this is what the bullish flags looks like. You understand? This is what it looks like. So let's open another. You can see it here. This is what it looks like. So when there's a bullish flag, there's always a bullish flag when the market is on the uptrend. So you strong, you can see strong on uptrend, and then the market make a retracement. And like I said, it's just a simple retracement. Make a retracement, then continues upward. So you understand? You get that during a strong uptrend or a bullish market. So let's look for the bearish flag. It's just the opposite of the bullish flag. You understand? Just the opposite of the bullish flag. It's nothing so special. So this the bearish flag. You can see this is the bearish flag here. There will be a strong downtrend. You understand? A strong downtrend. Let me the network is really slow because it's raining. Actually, it's actually very, very rainy at this point in Lagos, Lekki, Lagos. So okay, now we have it here. You can see this is the bearish flag. You understand? Now, you can see a strong downtrend, retracement, continuation. You understand? That's the bearish flag. Now, those are this pattern we are using, but we are not trading this pattern. We are training the manipulation of this pattern. So I just want us to understand what these patterns look like first. We need to understand this pattern. These patterns are created to manipulate part of the market. You can see the way it works. It's very clear, right? This is how it works when you see. This pattern is manipulated 80% of the time. So which means that this strategy I'm teaching you works 80% of the time. It has 80% winning rate. You understand? It has 80% winning rate, or probably let's say 70-30% winning rate. Yeah, let's be fair with that. It works 30% of the time. I mean, it fails. It works 30% of the time, fails 70% of the time. You understand? So which side would you be? Would you rather be on the side where it works or the side where it doesn't work? No, you have to be wise when you are making decision in this market. So I'm teaching you the manipulation. So when we say market manipulation, it means the way the big players play in this game. That's what I'm going to be teaching you. So calm down, because I'm about to show you what I call a simple gold, and I'm going to teach you rules of this game by the end of this video. So just stay tuned. Now, the next one we are going with is the wedges. The wedges are just the same thing like the flags, but the only difference between the wedges is that the wedges have sharp mouths. They're like an arrow. So let's take a look at the but instead of bearish or bullish, we use falling and rising for them. So we have the falling wedge. We have the falling wedge. Let's see what the falling wedge looks like. So now, this is a falling wedge. So this is what the falling wedge looks like. You can see there is a strong uptrend. It's just the opposite of a bearish flag. But the difference there is that you can see the way this one is sharp. It goes into a sharp a sharp mouth. Sometimes it gets very sharp. You understand? That's the falling wedge pattern. The falling wedge is you can find it during an uptrend. You can see going up, retracement for continuation. You understand? They are just simple retracement method. You understand? Yeah, no, it's none of a big deal actually. So it's none of a big deal at all. So let's go into rising wedge. So let's see what the rising wedge looks like. So the rising wedge, you get the rising wedge in the downtrend. Honestly, let's go to images actually, so we can have one more like this is a rising wedge. So the rising wedge is just the opposite of a bearish flag. You understand? A bearish flag. You can see just here a retracement. Then what happened? The market continue downtrend, retracement, continuation, downtrend, retracement, continuation. It's simple as that. So these four strategies, in fact it should be 6, because we have the peanuts as well. We have what we call the peanut. So we have the bearish peanut, but we don't really need to go too deep, but let's just branch those areas too. We have the bearish peanuts. You understand? You can see this is the bearish, like now this is the peanuts we are talking about. Look at this, is just the simple two images we have for it. You can see it's just like the flag, it's just like the wedge as well. You can see the peanut here, you can see the peanut, just the market retraces down, then continuation. For the bearish, you can see we have the bullish peanut and the bearish peanut. You know, these are just simple patterns created by the big players to manipulate the dumb traders out of the market. Honestly, you are just gonna be dumb shit manipulated out of the market, and let the market go back in the right direction. So let's go to the chart on how these strategies are manipulated. Now let's get into the game. So first of all, first of all, let's talk about the rules before we even go into the chart. So I will have to first go into the rules first. So now, what are the rules of this game? This game get rules. I'm not gonna lie, give you. Should you understand the rules? First of all, this rule only works for scalping. If you are not a scalper, if you are not scalping, you only have to scalp with this strategy. It's not for professional trading. It's not for traders that are using risk management. It has its own risk management, but I will teach you. So it's for scalping first. This strategy doesn't need stop loss. No stop loss needed. You understand? No what? Stop loss needed. The amount you are ready to risk should be what should be in your MT5 or whatever trading platform you are using to trade, is the amount you are ready to lose on that particular trade that should be in your account. So deposit deposit amount you are ready to lose for that exact trade. It should be needed, no stop loss. You understand? If you know you that trade you are risking $200, $200 should be the exact amount that will be in your trading account. Don't deposit more than $200 if that is it. So if you have $1,000 and you are risking $200, I will advise just move the $200 to another trading account so that it will not be affected. $800 to another trading account and leave the $200 there. Shey you understand? So you don't use stop loss for this strategy. So when you pick a trade, just leave the trade to run. If it run into loss, just know that the trade comes out when that 30% on assurance played in. That's it. Trading is a game of probability, you understand? So no deposit needed, no stop loss needed. Deposit the amount you are ready to, and it's basically for scalping, you understand? Just scalping. And then take reasonable lots positioning. So it should be a reasonable lot positioning, you understand? Now these are the rules of this game for playing what this game. Sure you understand? Now let's get into the charts. Now take a look at this. The first glance, we are going to start from this. You can see like this market. First thing is you have to first identify the market trend. You can see there is an uptrend here. So now when the market was going up, the market did something here. It forms, you can see it forms a wedge. It forms a flag. What happened here? When the market was forming the flag, here is the secret of the flag. The market has to come to a nearest order block. It is when the thing comes to the nearest order block, that's when you start what entering your positions. You just be tapping it the way you used to see it on all this thing. Just be tapping pa 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 pa, and then your market, the more, even though you can see the market, the moment the market gets into your position here, you start entering, it will look as if you are in loss, you are in loss, you are in loss, you are in loss, you are in loss. Then all of a sudden reversal, continuation, and then what, it continues. Now if you come here again, you find that there is something here, a flag, right? What happen? It comes to the nearest what, the nearest order block. So you find the nearest order block of fair value gap. I will teach you. So order block, this is order block, like if they can do before it makes a push to break a structure, you understand it? Because if you look at this place, but I don't want to go too deep, I don't want to make it too complex. Actually I just want to make it very simple, so I don't want to make it too complex. Let's just find the nearest order block like this. Now this is an order block. This is what another, if you don't know what another block, just go to YouTube and research and type in order block tutorial, so you understand order block and fair value gap. So I don't want to go too deep in this thing. I don't want to teach order block, fair value gap. That's for professional traders, but you just need that order block and fair value gap to understand this thing. Now look at here. If the market was coming down here, when it got to this point, you start opening your position, but you can see, this is why I say you don't use stop loss. It goes beyond this point. But what happened here is that it was not a break of structure here. It was just what, a fake out. It fake out to the point and then reverses back. And after the reversal, you can see it continues. Now let's see another magic. This thing, like I said, sorry. So like the manipulation here is that they will always tell you that when this thing break out, you see, if you are taking your trade from this breakout now, you would have lose your money. The others would have been manipulated out of the market. Yeah, you see what I'm saying, that you would have been manipulated out of the market, because you'd be like, this thing has broken out of the trend line here, and then everybody, now you can enter your position, and what happened? Manipulation. You are manipulated out of the market. She understand. Now take a look at this. You can see here there's another flag here. What happened? This flag comes what? To the nearest fair value gap here. You can see the gap, value gap. You enter your position and the market continues up. It's as simple as that. Very simple, right? Very simple. Very simple. Very, very what? Simple. So you keep waiting for opportunities like that for the market to show up. Always wait. You have to be patient. You have to ensure you see it clearly. You can see we don't have any opportunities here, we don't have any opportunities here, we don't have any opportunities here. These are just not regular retracement. Now we have another opportunity here. Let's see the game. You can see here, this is what another flag. What happened? It comes back to this other block here. No matter the thing enters the other block, you enter your position, you open more position, open position, then what? It comes back in your favor, and then look at how far it's traveling. You understand? This is another mini flag here. See, if you look at this, there is a fair value gap here. Markets came there, and what? See, it continues like that. So that's why I say this position, you don't use stop loss, you don't use, like, the rules are here. I've stated them. It's not a stop loss. Just put the amount you are ready to risk for that, and this thing gives a very high reward, honestly. And if you now have a proper understanding of market structure, you can go as far. See, the market is all about simplicity. Don't miscalculate. Don't overcomplicate it. You understand? So this is just, you can see it works well on USHF. It works on every pair. That's the thought that you add that to this. Let me update it. It works on all pairs. All pairs, commodities, um commodities commodities. It was on all pairs, commodities, indices, etc. Yeah. The reason I said that is because let's take a look at another. Let's take a look at it. What a random. Let's take GBP We just test it on different this thing. So it works on every pair, especially less volatile pairs. Now GBP is a very volatile pair. You understand? Now take a look at this. There's a flag here. See, there's a flag. You can see what happens. Let's see what happens here. Nearest order block. You can see the breaker block here. Price come to the breaker block here and continue upward. You understand? But we, as a smart money trader, waiting for the price. That price will still come back here. That's why we make this place a point of view. But this place a point of interest. A point of view, a point of interest. You understand? So price decided not to come back to this point. It's decided to move away from here. You can see it works most of the time on all pairs. Now here is another one. Here is another one, very clear, bro. So you need to know how to spot it as well. You can just watch more videos on this. But I doubt there are videos on this actually. So now look at this. This is a falling wedge. Let's see. Here's the nearest other block here. Where is the nearest other? Let's find the nearest other block. What we have here is another flow. This is another flow here. You understand? That's another flow. You can see it's moving now. It's coming back again. But one thing is the movement from here to this point. That's why I say it's a scalping strategy. You don't have to disturb yourself on having to take too much long positions. Like you have to wait for long. Except you understand market structure properly. Yes, you understand market structure. This thing is for newbies. It's just, now this is even a very obvious one here. Take a look at this. This is what This is a wedge. This is what? A wedge. And what do we have as the nearest? It failed in the first order fair value gap, but comes to this fair value gap and what? Validated. And what? It's moved. See the push. It's still continuing, right? In fact, there is even another one here. We have it here. If you look at it very well, we have it here. This is one. No, this is another one. This is another one. What happened? Price came to this what? To this zone. Like, okay, this other block here. Price came there and then pushes up from there. Then we have a reversal and then everything. You know, this strategy is a very easy strategy you can work with. Actually, it's a very simple and easy strategy. It's just soft money. Yeah, I call it the soft money. But always follow the rules. Honestly, always follow the rules. It doesn't appear most time on highly volatile market due to the extensive manipulation going on in highly volatile market. Sure you understand. So thank you very much. I'll see you next time. Bye.